Today we are learning adjusted selling price method for valuation of inventories. Okay, this method is also called as retail inventory method. Okay, so as the name itself suggests, it is widely used in the retail business. Okay, wherein the inventory comprises of various items, number of variety of items, and the individual cost of which are not readily ascertainable. Okay, the use of this method is appropriate for measuring inventories of large numbers and which are rapidly changing. For example, if you are in the retail business, there will be 10,000 varieties of items which you will be selling every day, and the inventory will be rapidly changing as there will be frequent purchases and sales. Okay, so it's not possible, or it's not practically possible to use costing methods to each and every individual items. Okay, each and every small individual item. So in this case we use this retail inventory method. Okay, so how do we calculate cost in this retail inventory method is, see, cost is determined, what we do is individual cost cannot be determined. So what we do, we determine cost by, we have a selling price, details of selling price. So we get selling price of inventories. Okay, and then we reduce the gross profit margin, okay, from the selling price. Now this gross profit margin may be for the individual item or a group of item. Okay, we will calculate gross profit margin for individual items or group of item, and then we reduce it from the selling price of the inventories to arrive at a cost of inventories. Okay, so this is how we calculate value of inventory in case of retail inventory method or adjusted selling price method. Now we'll see one example for this. Okay, Messrs XYZ are in the retail business. Following information are obtained from their records for the year ended 31st March 2001. Okay, goods received from suppliers. This is total goods received, value of goods received from suppliers. That is purchases 1575 500, subject to trade discount and taxes. That means the trade discount and taxes, the adjustment for that is not made in this. Okay, so subject to this, it's 1575 500. Then trade discount is 3% and sales tax is 11%. Okay, then packing and transportation charges rupees 87 500. So this is packing and transportation charges of purchases, correct? Then sales during the year is rupees 22 lakhs 45 400, and sale price of closing inventory is given. Okay, since cost cannot be ascertained, sale price of closing inventory is given 2 lakh 35,000. Find out historical cost of inventories using adjusted selling price method. Now using adjusted selling price method, we need to find out what is the historical cost of inventory. So for adjusted selling price method, what do we require? We require gross profit margin, correct? Now this gross profit margin or percentage will apply to sale price of inventory, correct? Then we will get cost of inventory. Okay, so for gross profit margin, what do we require? We require total sale price minus purchases, correct? Now in this sale price, this total sale price, we need to add both, that is goods sold plus selling price of inventory. Okay, because our purchases includes total purchases, right? So we'll add both goods sold plus selling. Now this will give you total purchases we are taking here. So this will give you gross profit margin. Okay, gross profit. So now let's begin. First step is to determine total purchase price. Okay, so what is the total purchase price? First we'll have goods received from suppliers 1575 500. So goods received from supplier, goods supplier, how much it is? 1575 500. Correct. Now we need to adjust trade discount and sales tax. Okay, since it's subject to trade discount and taxes. Trade discount is how much? 3%. So this is what is a discount which is received from the supplier. It will be 3% of 1575 500. So less trade discount 3%. Okay, so it will be 3% of 15,75,500. We are reducing the trade discount. Okay, it's a discount, so we have to reduce it. So this comes to how much? 53% of 15, 47 265. Okay, rupees. So this 1575 500 minus 47 265, we get 15,28 235. Now sales tax. Okay, sales tax is 11%. Now sales tax is 11%, so we need to add sales tax. Add sales tax. Now sales tax will be 11% of your net purchase price, that is 11% of 1528 235, that is your total purchase cost minus trade discount. Okay, so that comes to how much? 1,68,106. Okay, we have to add it. So 1528 235 plus 1,68,106, it comes to 16,96,341. Okay, so let's see if there are any other cost. Okay, there is a packing and transportation charges of 87,500. So add packing and transportation charges. Okay, 87,500. So our total purchase price comes to 17,83,841. Now this is the total purchase. Right, now what is the next step? We have to determine gross profit ratio. Okay, so for determining gross profit ratio, first we will calculate what is a gross profit. So for that we have to take sales plus selling price of inventories. Correct, since we are taking total purchases, we have to consider selling price of inventories also for matching concept. Okay, say suppose we have purchased some 100 units of goods and we have sold 80 units. We have 20 units in our stock. Okay, so if we take only sales against selling price of 80 units, we will be considering purchase price of 100 unit. So our gross profit ratio will be incorrect. So in order to get a correct gross profit margin, we have to take selling price of all the 100 units to match it with our total purchases. Okay, so let's see. So what is the sales during the year? Sales during the year is 22,45,400 and sell price of closing inventory is 2,35,000. So we'll just add it up. So it will be 22,45,400 So we'll take it as 22,45,400 plus selling price of inventory is 2,35,000. So this comes to how much? 24,80,400. Correct? So less purchases. So whatever purchases we have derived, that is 17,83,841. Okay, so this will give you gross profit. So this comes to 6,96,559. 6,96,559. So let's calculate what is a gross profit margin. So how to calculate gross profit margin is gross profit divided by sales into 100. So in this case we are taking 6,96,559 divided by the total, that is sale plus your selling price of closing stock, that is 24,80,400. So 24,80,400 into 100. So this comes to how much? 28.0825%. Okay, so gross profit margin is 28.0825% of your sales. So now let's calculate historical cost of our closing stock. So selling price of inventory. So how much is the selling price of inventory that is given? Selling price of inventory is 2,35,000. Correct? So we are taking it as 2,35,000. Okay, less we have to reduce the gross profit margin, correct, to arrive at a cost. So 2,35,000 into 28.0825%, that comes to 65,994. So 1,69,006 is your historical cost of inventories, correct, as per adjusted selling price method or retail method. So this is how you calculate historical cost of inventories as per retail inventory method. Thank you.